of strategy at NCC right now. Thank you so much, Mr. Sharma, for joining in with us on ET Now. And interestingly, what I'm seeing is you've spoken about this guidance that's come in from your side. You're targeting 15% growth in terms of FY25. Is it still intact? And in terms of the guidance, what is the strategy? Could we expect a better growth? And what will be driving the growth for the company now in this year?
Yeah, very good morning. Firstly, you're right. The one of the guidance numbers that we have shared with the street is the revenue growth of at least 15%. So as we speak, we continue to stick to the number, and we are quite hopeful that we should be able to hit that number. The second part of your question is about the revenue growth. Possibly you might be aware that we are already sitting at a very healthy order book, more than 57,000 crore. So despite the fact that we have not been able to bag a lot of projects in last quarter, in fact there has not been any awards because of this model code of conduct. But as we speak, we continue to sit at a very healthy order book of more than 57,000 crore, and this is the order book that is going to give us this revenue growth of 15% upwards.
I think that revenue growth of 15,000 upwards, and the order book is well above 15% above, and your order book is above 50,000 odd crores. But talk to me about the order inflow that you're expecting over the next few months. Of course, Q1 must have been soft because of the election issues as you talked about. Going forward, what's the order inflow target for the full year?
The order inflow target that we have shared with the street is any number between 20,000 to 22,000 crore.
Can you please repeat that? I missed that portion.
The number is 20,000 to 22,000 crore. Okay. For a change, we are this year talking about a band that is 20,000 to 22,000 crore is the order inflow guidance that we have shared with the street. Let me reiterate. The second guidance number that we have shared with the street is, revenue growth of 15% upwards on a relatively higher base. The third guidance number that we have shared with the street is EBITDA margin of 9.5 to 10% for FY25. And as we speak, we continue to, stick with the same number.
Mr. Sharma, what we spoke about, I want to circle back again in terms of the growth, the guidance you're giving is 15%, but when I'm seeing in the last couple of years, you're managing that 30-40% range is the growth. So why, isn't it being a bit more conservative when you're just saying 15%? I'm sure you would be managing to do because given the growth you've seen in the past.
No, this is not really a conservative number, Let us, in fact, we have been able to deliver a growth of, more than 30% in last 3 years in a row. So the first thing that we need to keep in mind is, relatively higher base. The second thing that we, must need to understand is, this year is an exceptional year. This is an election year. About, 3-4 months of this fiscal is already gone, due to the elections, the execution at the sites also, gets affected. So this year is not a, normal financial year of about 12 months, but practically 7 to 8 months. So if you really extrapolate the number that I have just shared with you, it would be close to the number that we have delivered in the past.
Okay, sure. But, just curiosity piquing, given the fact that, you have grown at a faster clip in the previous years. But just a few weeks now with the budget around the corner, any expectations in particular for the infrastructure sector?
Yes. In fact, in the last interim budget that this government has presented, they're all already talking about a very healthy allocation of, more than 11 lakh crore. So let us wait for a couple of weeks, and it is my considered view that, this story is not a story about, this budget or next year budget. This infrastructure story is a story that is going to play out at least for, next 4 to 5 decades. So we are, we are in the right place at the right point of time. And we are quite hopeful that we will continue to see, a lot of investments in different verticals of the infrastructure space.
A two-part question, sir. I understand that recently some of your ratings have also got upgraded. Will that impact your cost of borrowing, and will there be any savings on the interest cost? And secondly, you talked about the order inflow of 20 to 22,000 crore thereabouts. What will drive this order inflow? Is it going to be more of the buildings side of things? Is it going to be irrigation? Is it going to be transportation? Which vertical will drive growth for you?
Primarily three to four verticals. Two you have already identified, the buildings, transportation, and we continue to see very healthy pipeline of projects in what we call electrical T&D and our water business. When I say water, I am talking about water supply businesses, water treatment plants, STPs, those kind of businesses. So we are quite hopeful to see a lot of, project awards in these four verticals. And of course, there might be few awards in irrigation as well.
Comment on the ratings upgrade and any impact on the cost of borrowing or the overall interest cost?
It should hopefully go down, but whenever we are talking about a consortium of banks, there are 13, 14 banks involved, and we have to individually take this up with each of these banks. But hopefully, this should bring our interest costs down. But it is difficult to put a number at this point of time.
So difficult to put a number at this point of time, but overall a revenue growth target of around 15%, margin band of just around shy of that 10%, and overall order inflow of around 20 to 22,000 odd crores. Thanks, sir, for making time and speaking with us. Appreciate you joining us on the show, Mr. Sharma. Time now to take a look at.
If you like this video, then like, share and subscribe to ET Now.